Hey guys, today's Tuesday, quick trade breakdown. So today was really a interesting trading day. We had a really interesting regular trading hours, new open range gap. So really a new lesson I learned today as well. That's the business of today. You can see it here. Took those two trades, but yeah, I think you saw the executions before. Still lots, a lot to learn. Especially once again regarding money management. Before we go into the trades I took today, first really quick, today's trading conditions. So what we can see right here on NQ, we took out all-time highs right here, so daily buy liquidity, but we failed to do that on ES. So therefore we have already a daily S&T being in play. With that we can, I think, already drop to a 50-minute chart. Right here we have still the quadrants of the new week opening gap, and also right here we scrapped already London highs and created basically our bullish S&T with ES within our New York open kill zone window. So therefore the buy sell liquidity right here is kind of protected, should not really get taken out if we expect lower prices. And that's what we got. So we traded lower, but before we drop even lower, I want to show you once again regular trading hours, because today that's really important. For that we can also drop to a 5-minute chart. So we have also to keep basically yesterday's trading range in mind. So, and also once again Friday. So really important. As you see right here on Friday, we had a aggressive new open range gap, only traded back to the upper quadrant, from there expanded higher. Yesterday on Monday we were able basically to, after we reacted to the CE level right here of a only 40 handles gap, we traded lower and swept regular trading hours as liquidity, and also traded back to the upper quadrant, and more importantly also the CE level. From there on we basically had really trendline liquidity higher and created today's new open range gap, which consists of 63 handles. So once again a 40 handle gap. We want to see that we trade back to CE, but as you see already today was really bearish. So already with the first 5-minute candle we closed, as you can see right here, slightly below the lower quadrant level. That's really indicating bearishness, and that we are also likely to completely close in today's new open range gap, and that's what we did right here. My perspective, or my objective, was that we are going to expand even beyond our gap closer to the downside. Why? Because due to the fact that we had a daily S&T being in play, and also that we have really clean trendline liquidity right here. What is basically, or let's go maybe down to the trades I took. So what's maybe the problem here, or why my trades right here failed? So first of all, completely once again wrong time window. Okay, I'm going to short, but that's not a market, that's not a ATM model. I have to be more patient. In that case, trading right here out of FOMO, and just thinking that we're going to really expand lower. I mean, that can happen, but in that case we just cannot be part of that. That's just the case. That's just how it is basically. Still, I was expecting that we are going to expand lower. Why? Because we stopped right here in advance of basically our CE level of our new week opening gap. So to me that's right here, engineered sales liquidity, and once again we basically closed below the lower quadrant level and below CE on our regular trading hours chart of our new open range gap. Therefore I want you to see that we expand even beyond the gap. But first of all, you can basically expect that if we have really important electronic trading hours targets. So I already typed it out before, I think you saw it. But what I mean by that is that we need to have either a really strong bearish trending trend on the hourly or daily chart. Then it's likely that we're going to expand even lower. And we also should not expect that we always, only because we do not respect the quadrants level, will expand beyond the gap. So that's not the case. That only means that we are likely going to close in the gap, not that we expand below it. And that's what we did right here. So once again, back to regular trading hours. We only, so yes, right here, I want to see that we stay within the fair gap right here, that we are filling shorts and that we will expand lower. But we only closed in today's open range gap. We did not expand beyond it. We are still basically also in that case, with regard basically also yesterday's trade, still in a market maker buy model, and that's only completed once we reach external buy liquidity or recreate an S&T. And in that case, we needed to reach external buy liquidity. That's what we did right here, and only from there on we were able basically to complete our trend to the downside. And now I think we will also still eventually even expand a bit lower, but we already traded a lot lower below the open range gap. So that's really important. So therefore, in that case, to look for shorts right there is not the best. It's really a bad condition. Why? Because we already scrapped every session sales liquidity. We are below every opening price, and we are just not in the right time window. So to expect that we will expand lower from here is really just chasing price, and is not my trading approach. So that was definitely wrong. Also probably a bit too tight stop, but we have also high volatility. So yeah, really just be more patient, wait for your 10 AM macro. So right here 950 or 945, I think the draw is already clear that we will not trade lower, and then we are just basically able to not fall for the shorts in here, and then we know basically, okay, the draw higher is now clear. Therefore, waiting basically for a 10 macro will also deliver, or will also give us more high probability conditions. That's really important. In that case, was already long in here, but closed right here because I don't know why. Had my stop below the low, was actually correct, but felt really not confident, actually, I have to admit. So there's also not really clear structure in here, yes, but I was also not how you say it, comfortable with actually a right stop being in play. Once more short right here. So yeah, got stopped or closed, I don't know. We have to basically kind of ignore the executions right here, because that's definitely not my trading approach. I don't want to chase prices right here, and for longs I want to definitely wait for the 10 AM macro, and that's the long we got right here. Enter right here. That's how we want to trade. That's a perfect setup in that case. Now respecting the fair gap right here, also the smaller one right here, and from there we want to see that we trade higher, and we did this. We did that really with low resistance. Traded basically back into the new open range gap high. So 930 opening price, first partial right here, second partial at CE of the rejection block right here. I also basically typed out why I did not hold for the external buy sell liquidity right here or right here. And that's basically due to the fact that, in my opinion, we are not in bullish conditions, and I think I was also right about that. Still, basically, I could have also aimed for the external buy sell liquidity right here, and eventually even right here, and with that for the 830 opening price. Why? Just because we have a really clean, in that case, a clean regular trading hours objective. So in that case, it is now obvious that we are in basically definitely a market maker buy model, that the low right here is in, that the new open range gap low, which basically got closed in, is going to deliver as or with support higher, and therefore we can aim for the high right here as well. And there basically our market maker buy model is complete, because right here we have really our V-shape market maker buy model definitely being in play, also with sweeping the liquidity right here, trading back to CE level. So definitely a market maker buy model in here. Therefore it's kind of valid to even aim for higher prices, but in that case I think I'm also content with getting out at the CE level of the rejection block. That's a more safer one, and I mean that's already a 4.32 risk to reward, so RR trade. We don't need more than that. I think that's completely enough, almost 50 handles, so we actually don't really need more than that. We just have to trade less. We have to really avoid so many losses, also so many losses due to wrong money management, to being impatient, to trading before a time window, and also to trade when we have no clear buys, even when I really think that it's going to be, how you call it, I don't know, that's if we just be a bit more patient, that we wait for more structure, that will be even more clear how, where we are going to draw to. So that's really important. Yeah, once again, daily SMT with the high right here, so we do not expect that we are going to trade higher right here. Therefore, I want to see that we also right here stay below the CE level of the rejection block right here, and we completely did that. So really failed to even close above it or even near it. To me, that's really bearish. Therefore, I wanted to look for shorts, because I still think that the engineered session liquidity right here is really an important target, and that's what we really reached for. And also the lower quadrant level of our new week opening gap, also really important in that case, just because we have such a trend line liquidity right here. And that's what I wanted to see. And yeah, so once again, completely avoidable free losses. Shorted right here, got I think added right here, got stopped, shorted, added, and got stopped right here, I think. And yeah, completely avoidable. So just put your stop above, once again, the breakaway gap above the 830 opening price. I think I had that actually, but I was trailing my stop above the SMT, what I think is not really even that bad. I mean, we created SMT, and then I want to see that we drop lower with 1030, but sometimes it's just that we have high resistance. And in that case, ES was already really trading lower, and NQ was really not, giving up the ghost. NQ was way more bearish, probably also due to the fact that we had the bearish SMT being in play on ES and not on NQ. But as you can see right here on ES, we now also are trading back at the lower quadrant. So in that case, I have to be just a bit more patient, wait for the London close macro, and as you see right here, really delivered lower. In that case, yeah, once again, completely avoidable losses with the right money management. Just keep a wider stop, just leave your stop there, and be convinced about your narrative. I mean, I'm correct about it, but yeah, last short right here, first partial perfectly at the upper quadrant, second partial at the external liquidity and also at the CE level, and then we reached for the lower quadrant, but yeah, in that case, I was out right here. And why I did not close right here, because we're just really early, so 10:48, and in that case, I'm convinced that also the London close macro will deliver lower, and I want to be out basically after 11, and we reached the external liquidity perfectly at 11 o'clock. So that's really like clockwork, perfectly. And after 11, as you see right here, after 11.5, we will always, most of the time, really 90% of the time after 11.5, we are going to trade higher, if not with 11. So that's really interesting to see if the long close macro expands lower. 11.5 is basically your last chance to go out. But yeah, I think I'm really good with analyzing where we will draw to. Today was definitely not easy, especially regarding regular trading hours charts. So definitely learned something new, that we can find support in closing in basically or the open range gap of the day. So that doesn't mean that we have to expand lower right here. Yeah, I just need to trade less. I need to trade within the right time. I need to be more patient and really avoid so many loss management, so many money management losses or mistakes. So really, I basically know this to leave my stop right here. I mean, I had it traded due to SMT, but yeah, in that case, just keep a wider stop. High resistance, we do not want to trail our stop too tight. Also, stop rate right here, where I got stopped. I mean, you could say that's unfortunate, but that's how trading is. There will also always be also sometimes manual intervention, and therefore we have to be really aware of that and just keep always a wider stop. Sorry, keep a wider stop. And yeah, I think that's it. Hope you enjoyed the breakdown. I think today was actually really fun to see how everything played out. how we also were really reacting to those quadrant levels right here of the rejection block, how we utilize basically also today's Newton range gap so many times. I think really interesting. I really love the trading approach I have. So I think it's completely, I'm really able to master it. It looks like I'm not not even close, I think, regarding the executions, but it's also not really easy, but I will get there. I just have to be, once again, stick to my rules, and I'm learning everything, or basically learning every day something new, I guess. But also there are some things there which are definitely repetitive or repeating themselves, and therefore I'm also getting better. And I'm already trading since a long time, yes, but I think my approach is a bit differently to the most of the ones out there. So most of the people just basically do not even really know why the market is drawing higher in that case. I mean, I would not say that I know why you are trading higher in that case, but I think I definitely have a more reasonable approach behind it. It's just that I really lack completely in money management. So I mean, those shorts right here could have also, the stop outs right here could have also completely avoided with having my stop above the wick right here, which is basically the rule if you trade for value gaps. But in that case, it's just really volatile, and I don't want to have such a wide stop. But yeah, then I just cannot trade. So I have to wait for the 10 macro. And yeah, would have been completely, once again, a relatively easy trading day, I would say. So for being more patient, SMT being in play right here as well. If you trade only within your 10 macro, you know, okay, now we're going to trade higher, take a long right here. If you do not trade longs in here because you believe it, that we are not going to trade higher for today because of the, once again, SMT with ES, also that we close in regular trading hours, Newton range gap, and that we have just trend line liquidity as well. Then just wait for the setup right here. Short right here, you could also have entered a bit better within the merger gap right here, put your stop above the 830 opening price, above the breakaway gap, and just stick to the trade. And that's completely, I think, completely doable. So we will see. Maybe I will be there in some months. I don't know, but still enjoying the progress, and I think that's also one of the most important things. So hope you learned something new. Hope you enjoyed the breakdown, and see you soon.